Think about the last time you bought a soda, a new appliance, or even looked at the price of a Ford F-150. Since June 2025, those prices haven't just risen, they've been held hostage by a 50% tax on the very metal that builds them. But this morning, everything changed. A leaked report from the Trade Representative's office suggests the Trump trade team is effectively hitting the undo button on a massive chunk of these levies. Is the America First strategy hitting a wall? Or is this a calculated retreat to save the 2026 midterms? Today, we are diving into a sudden, massive pivot in U.S. trade policy. For months, the administration doubled down on a 50% tariff on every single derivative of steel and aluminum, from lawnmowers to soup cans. Now, they are scrambling to narrow the scope. The bottom line is simple. The administration realized that taxing raw metal is one thing, but taxing every product containing it created an affordability crisis that is melting their support in the polls. Over the next 10 minutes, we'll break down which sectors are about to get a massive cost relief injection, and why this move is the ultimate peace offering to the EU and Canada. Right now, the market is reacting in real time. In London, aluminum prices dropped immediately following the report. But domestically, the U.S. Midwest aluminum premium, the extra price American buyers pay, has soared to a staggering $1.03 per pound. That is a 74% premium over the rest of the world. Investors are currently trapped between frustrated uncertainty and greed. They are hungry for relief, but they are terrified of another 3 a.m. policy shift that could reverse these gains overnight. So, why the sudden change of heart? The catalyst isn't just economics, it's logistics. After rushing out these tariffs last August, the government hit a wall. U.S. Customs and Border Protection simply cannot handle the complexity of tracking every single gear and bolt entering the country. But the hidden agenda? The 2026 midterm elections. The math is brutal. These tariffs were meant to protect steelworkers, but they raised the average household tax by an estimated $1,300 this year. By narrowing the scope, the administration can claim they are still tough on China, while lowering the price of a refrigerator for a voter in Pennsylvania. Let's look at the winners and the losers. The biggest winners, solar energy and the auto industry. Every car uses roughly half a ton of steel, and easing these derivative tariffs saves about $2,000 per vehicle in production costs. On the other side, big steel. Groups like the American Iron and Steel Institute are already lobbying against this, fearing a surge of harmful imports will flood the market. This policy is effectively choosing the 12 million workers in steel-using industries, over the 137,000 workers in primary steel production. This isn't the first time we've seen this play. This mirrors the 2018 exclusion cycle. Back then, the first Trump administration realized that blanket tariffs were a blunt instrument that hurt allies like Canada and the EU. History is repeating itself. The 50% shock and awe phase is giving way to the surgical precision phase, and the world is forcing this change. The EU has made it clear. No trade deal happens while their car parts face a 50% duty. By narrowing the scope, the US is buying a peace treaty with Europe so it can focus its fire entirely on China. So, what is the final verdict? For the next 3 to 6 months, expect a volatile, sideways crawl for metal prices. While the narrowing will lower costs for finished goods, the tax on raw metal isn't going anywhere. If you are an investor or a business owner, take 3 steps. First, delay major spot market buys of derivative parts for 60 days. Prices will likely dip. Second, look at downstream manufacturers, the companies that make the stuff out of metal. Their margins are about to expand. And third, ensure your suppliers have melt and pour certificates ready, because enforcement on origin will be brutal. Now, I want to hear from you. Is the administration right to offer affordability relief to consumers? Or are they betraying the steel workers they promised to protect? Should we protect the factories or the families? Drop your thoughts in the comments below, and I'll be joining the debate.